Hey everybody, it's Cedric here. I'm here with Tristan Wesley. He's a loan officer that specializes with the VA loan. He knows a lot about loans. I actually met him when I took my VA loan certification and I found out he was a veteran and we hit it off the bat. All right, Tristan. I had you on the show before, but you want to share a little bit about yourself?
Good morning. My name is Tristan Wesley. I'm a retired Sergeant First Class from the United States Army, much like my boy Cedric here. Former air traffic controller, definitely still a coach, teacher, mentor, counselor, everything that comes with being in real estate. Veteran loan, VA loan, lending specialist, but I do every loan that my company allows me to do. So yeah, I'm here.
Well, the reason why I wanted you to come on is I help people when it comes to showing a property, going through the house. But there's a lot of people that ask about loans. And whenever like I meet with you, you'll say something. I'm always thinking in my back of my mind, I wish other people could hear this. Because these are like some real gems and it can help a lot of people. We're not going to cover everything that we talk about. I wish we could. There's just so many benefits that I learned from you, but let's kick it off with one that we recently dealt with. What happens if you lose your VA loan COE?
You get to reapply for one, right? There are three main ways to apply: online, through mail, or by phone, by contacting the or your lender. Sorry. So really, kind of technically four, but if you choose the right lender, such as myself, shameless plug, right? We can pull it for you. We can also apply for you as well. You don't even have to worry about actually going back and applying for it for yourself. But if you want to, you can go onto the VA website and apply for it yourself. You need your DD 214 and your statement of service.
Okay, so for those who may not know, can you explain what is a COE?
A COE is a certificate of eligibility. This document, the most important document in the VA loan process. I'm going to say that again. It's not your DD 214. It's not your statement of service. The most important document in the VA loan process is your certificate of eligibility. What that tells me as a lender is a few things. Number one, tells me if you're even eligible, right? Tells me what your eligibility is. Two, if you are a disabled veteran, it tells me two things that are very important. These are key if you're a disabled veteran. It tells me whether or not you are exempt from the funding fee. And we'll talk a little bit about the funding fee when we talk about fees. It tells me if you're exempt from the funding fee, and it also tells me how much you're receiving in VA disability. It also tells me the amount of your eligibility, which on your COE, it will say $36,000. No, you're not going to buy a house for $36,000. That $36,000 is not the amount that you can use to purchase. It is the amount of your eligibility. And so me looking at that COE with $36,000 in eligibility, nothing used on there, because it's also going to tell me how much of your eligibility you've used. It's going to tell me the loan amount. It's going to tell me if that house has been foreclosed, if there's a deed in lieu of foreclosure, which is a lot more mortgage stuff, a lot more real estate stuff. But basically, it's going to tell me everything I need to know about you as a veteran, whether that's active duty or as a veteran off of active duty.
I mentioned to you before about somebody that was trying to refinance and they were trying to do all this stuff. And you mentioned to me a term that at the time I had never heard of. You said she should try a recast. Can you tell
Yes.
me what is a recast and why is it beneficial?
So a recast essentially is like a refinance without refinancing, without getting your credit pulled or anything like that. Scenario: you come into a large sum of money. You get with a financial advisor and the financial advisor says, hey, don't you have a mortgage? Why don't you take this large sum of money, put a large payment towards your principal? When you do that, you can call the lender to recalculate your payments based on a new lower balance, which could result in a reduced lower payment, which will do a couple of things. It'll keep your loan terms and your interest rate right where they are. So let's just say you have in this market right now, if you close within the last year, you might have a 5.5% interest rate, right? You don't want to refinance into a 7% interest rate, right? But you came into some money, let's say $10,000, $15,000. You decide to put that on your mortgage. You call your lender and say, hey, I want to put this $15,000 toward principal, and I want to recast my loan so I can get lower payments. That's essentially what a recast is: a recalculation of your payments while keeping your loan terms and your interest rate intact.
Cool. Thank you. When it comes to a VA loan, what are the fees associated with a VA loan?
For the nerds out there like myself, right, the VA has a whole pamphlet on everything related to VA loans. In chapter 8 of that pamphlet, there are 18 pages dedicated to just fees, but there's two main pages and I actually have it on my laptop right now. It is called VA Lender's Handbook M26-7, and there's a whole chapter, like I said, chapter 8, just on fees that can be paid by the veteran. And there's also 2 pages that covers what a lender can charge and what veterans cannot pay. So what can VA borrowers pay? It all basically boils down to what is customary locally and then what's negotiated. There are closing costs associated with every loan, including the VA loan. I know there's this misunderstanding out there in the world that I'm a veteran, I don't have to pay any closing costs because I don't have a down payment. Down payment may be 0, but closing costs are over here. And those closing costs are fees that are associated with the structuring, the recording, and the whole process of the loan. So what are some of these fees? The appraisal fee is one of those fees. Some lenders charge you for it up front. Some charge it in the process of closing, but you're going to pay for it one way or the other. You're either going to pay for it at the beginning or you're going to pay for it at the closing table. Title fees, you're going to pay for title fees. And so for those folks who don't know what title fees are, there's this, in the process of closing a loan, there's this entity, this third party, whose responsibility it is to research all parties pertaining to the sale of a home and also the home. They're going to do their history. They're going to research you, they're going to research the seller, and they're going to research the property. And what they're looking for is to make sure there's no bankruptcies, no liens, no things that you did not share with myself as the loan officer or your realtor or anything like that. There are fees that are associated with that third party that can be negotiated, right? They can be paid for by the seller or you as the buyer. Those are part of the fees. Those are a healthy part of the fees that a borrower can pay. Property taxes are paid in arrears. So in the process of buying a house, a lot of times the seller is going to pay for those property taxes because property taxes are paid in arrears. However, you will probably still be partly responsible for some of those property taxes as you are purchasing the property. Those are some more of the fees, right, that are associated. But for anyone interested, I highly suggest you go to Chapter 8 of VA Lender's Handbook, M26-7. It's not a great read by any means. You know, like I said, you got to be kind of like a nerd like myself to want to read it. But I will read this. The veteran can pay a maximum of reasonable and customary amounts for any or all of the itemized fees and charges designated by VA, plus a 1% flat charge by the lender, plus reasonable discount points. And I want to point out the reasonable discount points. What that means is there's a par rate. A par rate is basically a rate that you don't have to pay for, okay? The average interest rate right now is about 7.07%. If you get a 7.07% interest rate right now, which is the average, you won't pay for that interest rate. If you go above that interest rate, you are likely to get a credit, meaning money towards your closing costs. That can be used for discount points. That can be used for your closing costs. If you go below that 7.07%, you're going to have discount points, right? And that is going to be 1% of that loan amount generally. And as you keep going lower, right, you start to add more and more money. And we can do a whole other video on discount points. But what I want people to understand is whatever the interest rate is, whatever the average interest rate is, if you go below that, you are going to pay for those rates. Now, whether it comes out of your pocket or you negotiate it with the seller, that's up to you and your real estate agent and your lender on how you guys structure that. But just keep in mind that everything is negotiable.
Yes, sir. So thanks for covering that, because I discovered something. I ran it by you. I had a client and we was able to get the interest rate down to very low, I think to a 3 or 4. But also you got to look at your paperwork and you'll see something called origination fees. Can you explain that?
Another one of those fees that are charged to the borrower. Now, with the VA loan, you can have an origination fee, but it has to be 1% of the total amount. I'm still in Chapter 8. I'm just going to go to it. That 1% is a flat fee. In addition to the itemized fees and charges, the lender may charge the veteran a flat charge not to exceed 1% of the loan amount. To calculate the 1% on the principal amount after adding the funding fee, if you have a funding fee, to the loan, which the funding fee can be paid from loan proceeds or added into the loan. The flat fee is intended to cover all of the lender's costs and services, which are not reimbursable as itemized fees and charges. So what are some of these? If the lender requires an appraisal, the lender pays for that out of their 1% flat fee. Lender's inspections, except in construction loan cases. Loan closing or settlement fees. These are fees that the lender requires, not that are part of the process of closing. Attorney services other than for title work. We live in the state of Texas. Mostly everything is going to be done through through a title company. However, title companies have, guess what attached to them? Attorneys. So there will be an attorney fee on there, but the lender can't require it. And if the lender does, it is one of those things that they have to include in their 1% flat fee.
How do you choose a VA loan officer, and what makes one a better choice?
Interviewing. Honestly, buying a house is the biggest financial decision most people will ever undertake in their lifetime, at least 2 to 3 times in their lifetime. Just like if you were to get a roofer come to your house, you're going to find people that are licensed, people that have good reviews, people who know what they're doing. Everyone does VA loans if they're authorized to do them by the VA, but not everyone does VA loans, meaning you have people whose job it is because of their license, they are authorized to do it. But not everyone cares about veterans. Not everyone cares about putting people in a home. Not everyone cares about customer service. Not everyone cares about having knowledge and expertise and keeping themselves sharp enough to be able to service their customers, their veterans, the way others might do so. So I would always recommend, even though I'm a certified military housing veterans lending specialist, I'm a veteran as well. I specialize in VA loans. That doesn't mean anything if you don't interview me. You should always interview your professionals that you're choosing to represent you in the real estate world.
I'm asking some questions that people have asked me online, and I'm like, I'm not a loan officer, man. So I'm gonna ask you, what do we have to do to get PMI removed once we hit 80% LTV?
So PMI is private mortgage insurance. It is associated with conventional loans. This is where a lot of people get that you need to put 20% down on a conventional loan. Keynote here, you don't have to put 20% down on a conventional loan to buy a house with a conventional loan. You can put down as low as 3% in order to obtain a conventional loan based off of your credit, if you're a first-time home buyer or not. Private mortgage insurance, or PMI, can be removed on a conventional loan once your equity hits 20%, or your loan to value, LTV, your mortgage balance drops to 78% or less of the home's purchase price. And you're going to call your lender and you're going to say, hey, listen, I would like to cancel my PMI. And they should have processes and procedures in place to help you do so. But the first step is to call your lender, or what we also call servicers, because you might start with LoanDepot, right? But then go your mortgage switch to Mr. Cooper, for example, and you'll be paying your mortgage with Mr. Cooper. And then once you've reached that 78% of home's purchase price, you can call and ask for that cancellation.
Is there a prepayment penalty?
In most cases, no.
How do I make extra payments towards principal?
Call your lender. Call your servicer. Let them know that you want to make that principal payment, which goes back to recasting. If you make that extra principal payment, which you can do at any time, depending on your servicer, but what you should be able to do, let me use that word, at any time. If you've made a large enough payment, you can ask for a recast.
Can I forego escrow and pay my home owner's insurance and property taxes?
So this is a tricky question. There's 2 schools of thought. There's a yes school of thought and there's a no school of thought. I'm going to start with the no school of thought and go to yes. No, because you're going to end up with a significant tax bill. And if you're in the state of Texas, your tax bill is going to be due January 31st and it'll be late February 1st. So if you bought a house and your property taxes for the year are $7,000, if you hadn't put that money back, you're going to owe $7,000 on top of your homeowner's insurance, which depending on where you are in Texas can be $2,000 or more. So you might have $10,000 due by February 1st, actually January 31st. So a lot of people recommend that you just go ahead and pay it through escrow. Now, you can request an escrow waiver. You can ask for an escrow waiver. But the thing is, you will be paying those property taxes outside of your lender, which makes you responsible for paying them on time, because your property tax bill is going to come out in October, somewhere between October and November, and it's going to be due 90 days later. No being you're going to be recommended to have an escrow account, which helps you out. It does make your monthly payment seem higher, but when you think about it, you're paying almost $10,000 over a course of 12 months versus putting that money off to the side and hopefully paying it on time by January 31st if you're in the state of Texas. 2 schools of thoughts there. Now, if you're a veteran and you're 100% disabled veteran, you don't have those property taxes to pay anyway. You can decide if you want to escrow your homeowner's insurance, for example. Some veterans I've worked with have decided, well, since I don't have property taxes, I'm just going to pay that $1,200, $2,000 out of pocket at the beginning of the year. And that's your prerogative.
What's a question most people don't ask about the VA loan that you wish they would ask? And what's the answer?
Can I buy a fixer-upper as a veteran with the VA loan? The answer is yes. How? Well, I know the company I work for, LoanDepot, has a VA renovation loan. That VA renovation loan doesn't cover like putting a pool or anything like that, right? But if you find a house that you love and the kitchen is outdated and needs to be renovated in order to be livable or even, be a place that you really want to be in, you could utilize a VA renovation loan to purchase that property and have the renovation part of the purchase of that property.
Nice.
Another question that veterans don't ask enough is, can I buy a multifamily property utilizing my VA loan? Yes, you can. You do need to live in it for 1 year. But if you're a 100% disabled veteran, let me tell you something, especially if you're single or you have a spouse that can see the vision, see the future, you should be buying a multifamily property. I'm in the process of looking for one myself because I'm a 100% disabled veteran. It's a dream when you're 100% disabled. You're not paying any property taxes. And depending on where you buy it, you might have an HOA. But here's the thing, you're putting yourself in a position to live as cheaply as possible. Someone else gets to pay your mortgage. Now, I'm not going to sit here and say that it's all sunshines and rainbows because it's not. You might have a tenant from hell, but you could also have a tenant from heaven, right? You might get that one tenant that you absolutely love. And so you can utilize your VA loan to set yourself up for success. You don't just have to use it to buy a single family residence. You can buy up to a 4-unit that you have to live in for 1 year and put yourself in position to rent that unit out that you're living in. And, after being there for 1 year, setting yourself up to where someone else is paying that mortgage for you.
Man, I tell you what, I wish I had known about this when I was active duty. I spent a lot of my time living in apartments, man.
Man, let me tell you. Yes, sir. I wish I would have known. But you know what? No, I wish I would have listened. I had an E7 tell my family and I, this is what you need to be doing. Because we were looking for a place to stay and came across this guy with this fourplex. He was an active duty E7. When he pulled up, he pulled up nice. Bro was shining. Bro was shining from the outside to the car. I was like, man, I would be like this dude. I didn't listen. I could have literally been like him if I had just listened and not let fear keep me from doing what I needed to do.
Fear does stop a lot of people from taking an opportunity. They got us out here trained to dodge bullets and do crazy stuff. But when it comes for something personal for us, isn't it funny how fear can stop us? But we'll go out there and dodge some bullets in a minute.
Yeah.
It's interesting.
What I've learned, honestly, on this side is that a lot of people are afraid of taking imperfect action.
Ooh.
Yes, we have a lot of people, myself included, who are afraid of taking imperfect action and are looking for all of the things to line up and the stars to align. Just do it. When I became a loan officer, I was an air traffic controller. Just do it. When I became a realtor, I was still an air traffic controller. Just do it. Because at the end of the day, do you want to let fear lead you to regret later on? I shoulda, coulda, woulda. Or do you want to just do it? There are professionals out here like myself and like Cedric who want to help you just do it. Call us, utilize the strength that we have and the knowledge that we have and the expertise that we have to help you get over your own fear so you can take the imperfect action and we can help you along the way. My clients, I'm still in contact with them now. The ones that I closed when I first got into the business, all the way up until the last closing I just had. I'm your loan officer until either the Lord decides I don't need to be doing loans anymore or you decide to fire me.
Good stuff. So you have an event coming up, and would you mind sharing about that and give the people a way to contact you? We can wrap it up.
The event that I have coming up is called Operation Welcome Home. It is an event specifically designed for veterans to come out and ask these types of questions live and in person, get their questions answered. Also, for those who come ready to take that imperfect action, I will be doing pre-qualifications, not pre-approvals. I will be doing pre-qualifications on the spot that can turn into pre-approvals. And the difference between is that you come with pay stubs. Bring your last 30 to 60 days of pay stubs, your ID, and then you're going to fill out an application right then and there. And then we will talk right then and there about what your loan application process looks like. It's going to be at the Keller Williams Signature Brokerage on February 15th at 4:30. For those of us who still like military time, 16:30. My phone number is 334-828-3790. My work number is 281-716-5643. Contact either of those numbers. I will get back in contact with you. We will set up an appointment, a mortgage consultation, and I will walk you hand in hand, side by side, through your entire process. But come out February 15th. It is a Saturday, 4:30 to Keller Williams Signature. There is an Eventbrite link. I will send it to Cedric so he can put it at the end of this recording. Click that, register, and I hope to see you out there.
Man, that'll work, Tristan. Hey, thanks for your time, brother.
Yes, sir. Thank you.
It's always a pleasure.